Best day ever, Nick.
Best day ever. I'm clearly not as invested.
I know
as
you are not as invested as I am. That's okay. There's always tomorrow.
There's always tomorrow.
Yes. Today's an interesting topic. I get this question a lot from folks, especially when I am representing one or the other, as I tend to do. But people ask, hey, what's the difference between a credit union and a bank?
That's a great question.
Do you know?
So what's really funny, before I answer your question, I didn't know that credit unions really existed or that there was a difference until I got into the financial planning world in 2015.
Oh, really?
So 4 years ago, I did not know I'd never heard of a credit union.
So interestingly, the credit union movement, which is what it's called, all the folks out there that are leading the credit union charge, it's the credit union movement, have a marketing campaign, and it's something like Discover Credit Unions or See Credit Unions or something like that. And candidly, I think from a PR perspective, there's a lot that could be done to help shed some light. But I want to highlight on the show the major similarities and differences between the two.
Cool. Let's dive into it.
Let's do it.
What's the first thing that is, this is the difference?
The very first thing is that, and there's really two that I'm going to do first thing. Number one is banks are for-profit.
Okay.
So their owners are shareholders. So if you are the shareholder in a bank, you own stocks or shares in the bank, you get paid a percentage of the profit of that bank. Okay. Credit unions are owned by their members, and their members are member owners. So it is a not-for-profit cooperative owned by the members.
Gotcha.
So if you are a client of a bank, you have no ownership. But if you are a member of a credit union, technically you are a member owner of that credit union.
Got it.
Yeah.
So there's a self-interest, it sounds like.
There is a self-interest. Yeah.
Which is awesome.
It is. And some of it goes way back to how they were formed.
Okay.
You know, the very first credit unions that were cooperatives was, as an example, if you worked in a manufacturing facility and, I worked right alongside you and I wanted to buy a house, but I didn't have enough money to buy a house. Well, if you went to your fellow workers and said, hey, let's all pool our savings together and then we'll loan Adam some money to buy his house, he'll make payments back to our cooperative and we'll all share in the benefit of that.
Gotcha.
Right?
Now, are you saying cooperative or cooperative?
Cooperative.
Okay. But it's a very cooperative effort.
Yeah, it's a cooperative effort. Yeah.
Okay, that's awesome.
Yeah, so it was a cooperative, but it's cooperative.
Okay.
Yeah.
Cool.
That's where the cooperative thing came from.
Oh, okay.
Yeah.
There you go.
Yeah. So what you'll find is a lot of the credit unions came out of movements within organizations to cooperative their money to make it easier for their people to buy homes, buy cars, do what they needed to do.
Okay. So it sounds like there are a couple of benefits in using or participating in a credit union. What are some of the main benefits as to why people would join a credit union and be a member?
So number one is the profit that is generated through that credit union. You know, they are called not-for-profits or nonprofits, but they do make profit.
Okay.
The profit then generally either goes back in the way of lower rates on car loans or higher rates on savings or things like lower fees. So you might not pay, as high of insufficient fund fees or the fee to open a loan or close a loan might not be as high.
Ah, okay.
Yeah.
So it's much more friendlier. Much friendlier.
They are intended to be a little more friendly, I think, and credit unions by and large have a little bit more of a personal feel to them. So they tend to be more local, and people in the branch, particularly in smaller credit unions, they generally know everyone that comes into their credit union.
Yeah.
Right. So there's a little bit more of a personal feel to it.
Gotcha.
Yeah.
Okay. Yeah, I was gonna say, because when I go to my bank, it's a big bank. I don't know anybody there, and they for sure do not know who I am.
Yeah.
Yeah. I mean, I think another difference is. And what you're talking about is a very local, or there's really a community base, right?
Yes.
I think with banks, it can be so huge. They're on a national level, Chase, Bank of America, etc.
Yeah.
But all the credit unions that I do see or have seen are, it's like particular to a county or something like that. So it seems like it's a little more location dependent than independent, regardless of where it is. But
yes,
is that, would you say that's accurate, or is there any?
I'd say it's accurate to an extent. There are some credit unions now that are growing to such an extent that they are well over $1 billion in assets,
Oh, wow.
meaning they've loaned out at least $1 billion in loans. Some are as big as 10 billion or 20 or 30 billion, like if we're talking a Navy Federal credit union.
Okay.
The challenge that creates for the smaller credit unions is big banks are saying, hey, this isn't fair. These are all not-for-profits, but they're making massive profits just like a bank would. So because they're not-for-profit, they're taxed differently. In fact, they are not taxed. So you've got these major credit unions that are not paying income taxes on the money that the corporation's making.
Okay.
Yeah. So that becomes a bit of a challenge for the smaller credit unions that are very hyper local and trying to get back to the communities and kind of get an unfair shake.
And then I also hear that it's a little quote unquote unfair for the really big banks too, because banks are going to be paying, because they're a for-profit company, so they're going to be paying taxes.
Correct.
So ideally, what I'm getting is you either want to be a part of the biggest credit union. Like that would be kind of like that would be like a win-win, right? I would be part of the credit union where I get lower interest rates or higher savings rates. There's the personal feel, and I'm also a member versus a shareholder.
It definitely seems logical.
Yeah.
That you would want to be that. Now, what will happen is the bigger the institution is, whether it's a credit union or a bank, generally speaking, the more resources they're going to have in terms of online capabilities, number of branches, services they can offer, all those kinds of things. So as an example, and we take some of the biggest names out there like Wells Fargo, US Bank, Bank of America, well, they've got branches everywhere.
Yeah.
So there is an advantage to that. Whereas some of the smaller or mid-sized credit unions might only have 2 or 6 or 12 branches.
Yep.
But what they do offer is something called shared branching, where you can go into any branch at any credit union for the most part throughout the country and go in and do your transactions just like you would at your home credit union.
Gotcha.
Yeah.
Okay. That's very interesting.
Yes.
So it's kind of like a apples and oranges in some sense.
It is.
It's kind of like based on your personal preference.
It is.
Yeah.
It is, yeah. And there are great local community banks. There are great huge banks, just as there are great credit unions and large and small. So some of it's kind of a personal flavor, whatever you're up for.
Yeah. I mean, I know, to share a personal story, my mom is very, very attached, and not in a bad way, but attached to East West Bank, which is where my parents have banked. And, a smaller bank. Disclosure, there are no East West banks here in Des Moines.
None.
It's particularly targeting the Asian demographic. But one of the things that, because it is smaller, their perk, if you will, was that I could go to any ATM, whether it's Chase, Wells Fargo, whatever the case is, and they would waive the transaction fee.
Okay.
Yeah, so essentially I have shared ATM.
Yes.
Versus shared branch, But yeah, it's a personal preference for my mom, for sure.
Yep.
So, interesting.
That's cool.
Yeah.
It is different. It's different based on the branches, the locations, whether it's a bank or a credit union, all the different services. So for East West, as an example, if they're waiving ATM fees, there may be some other fee or some other service they're not offering to save money in order to offer that to you, right?
Yeah, yeah.
So,
and I don't even know what that would be. So that could lead to a great challenge.
It could.
Yeah.
Maybe we should figure that out.
Sure. So the challenge. Is there anything else that you want to?
No, nothing.
Okay. So the challenge for you is to really, first of all, know where you bank, whether it's at a bank, national bank, whether it's a credit union, local, and ask yourself, are you pleased with the services that are actually provided? Or are there services that you wish they had that they currently don't have? So it'd be an opportunity to really re-examine your current banking situation, whether it's with a credit union or a bank, and to see if there's opportunity for change or a shift, or to really be comfortable with, oh no, I'm happy with where I'm at.
Yeah.
Yeah.
Good. That's awesome.
Yeah. So now you know the world, and I'm more present to the world of the different options that are available. And part of the intention of this podcast is to really shed light and awareness to the different things that are available to you, because with more information, we think that you can be much more empowered and in control of your life.
Making good decisions. Indeed.
Good decisions. Yep.
All right. Thanks for joining us. If you like it, click like, subscribe, leave a comment down below. Send questions to questions@masteryofmoney.com. We will see you next time.
Mañana.